After work in the evenings, British care worker Nicola Frape turns the heating off and huddles under a blanket with her daughter and a hot water bottle. Adding an extra layer costs nothing, she says, but leaving the boiler on drains her already stretched bank account. Following a decade of stagnant living standards, Frape is one of millions of normally financially comfortable Britons who are now facing a cost of living crisis.
There's just too much going up at once. It's all at the same time, and people are feeling the pressure now. The pressure's just going to be even worse in April. So for days out or going out for treats, cinema, going out for a meal, we've cut back on them now because you just don't know what you're going to need the extra money for.
Surging prices are inflicting what the Bank of England says will be the biggest single-year hits to living standards in 30 years. April is when energy bills are due to jump 54% to around £2,000 or around $2,700 per year per household, only some of which will be offset by emergency government support. Inflation is soaring. Britain's consumer price inflation rate is set to top 7% in April, and tax increases kick in later in the year too. 52-year-old Jackie Gordon, visiting this food bank in London, says she often goes without food.
Last night I went to bed hungry because I didn't have nothing to eat. I have to pay my bills, I'm right behind with my rent and I don't want to get evicted.
The government is hoping the cost of living squeeze, while sharp, will prove to be short. It will spread some of the fuel price increase over the coming years and cut a tax for people in lower value properties to provide support through 2022. But some economists warn 2022 is likely to leave a lasting mark on poorer households, even if inflation falls.
HSBC has good momentum going into this year. That was the phrase used by bank CEO Noel Quinn on Tuesday. The positive feelings come after HSBC doubled its annual pre-tax profits in 2021 from a year before to just under $19 billion. The lender was helped as expected bad loans from the health crisis did not materialise. HSBC also took advantage of lower than expected impairment charges. Borrowers reaped the benefit of government support in markets hit by the health crisis. The upturn and current global economic conditions meant HSBC brought forward its key profitability target. If, as predicted, central bank interest rates rise worldwide, HSBC projects it could reach its goal of double-digit return on equity in 2023, a year earlier than thought. The bank said it would buy back up to $1 billion of its own shares once it had finished an existing $2 billion buyback programme. HSBC's London-listed shares were down around 1.5% in early trade, hit by global jitters over the crisis in Ukraine. A big European share sale has driven closer. German carmakers Volkswagen and Porsche said Tuesday they have negotiated a framework agreement to prepare for an IPO of the luxury brand. The statement is the first confirmation from both parties that a listing could happen. But nothing is fully set just yet, as VW said this was not a final decision. While VW owns the Porsche brand, the Porsche and PH families are still the largest stakeholder. Rumours of a listing have sent shares up in the past, but nothing has yet gone ahead due to the company's complex stakeholder setup. Any agreement must therefore be approved by the management and supervisory boards of both parties. If the IPO does move ahead, it would be one of the largest ever listings in European history. Reports estimate Porsche could be valued at between $51 and $102 billion. Both VW and Porsche saw shares boom in early trade, gaining as much as 10% before pulling back slightly.
You might think these old tyres are useless, but one Zambian company is getting them back on the road as fuel. Mulenga Mulenga, Chief Executive of Central African Renewable Energy Corporation, says they are cleaning up the environment by converting waste into energy.
And the positive contribution is that the gas that we are producing, the petrol that we are producing, the diesel that we are producing is of a much, much lower cost, or the production cost is so much lower than the normal diesel and petrol that you're getting from your filling stations.
Mulenga says they are currently processing 1.5 tons of waste, which also includes plastic containers, to make 600 to 700 litres of diesel and gasoline per day. Now, that's hardly enough to dent Zambia's mountains of rubbish, or its $1.4 billion annual fuel import bill. But energy analyst Johnson Chikwanda says any initiative that reduces import dependence needs to be supported.
It is lessening the burden on looking for forex, because if you are going to be looking for 1.4 billion United States dollars every year, then you can understand why the Zambian kwacha is constantly under pressure.
Mulenga's company is now seeking investment of $60 million. That's to raise output to 400 tons of diesel, 125 tons of petrol and 30 tons of liquefied petroleum gas. All, he says, at roughly half the cost of imported fuel. However, just how green such projects are is a subject of debate. Plastic and rubber are made of long chains of hydrocarbons that can be heated and broken down into something resembling crude oil. The process involves burning waste rubber and plastic and mixing it with a catalyst. From a climate change perspective, that takes a lot of energy, and the products still release carbon dioxide when burned. However, waste management remains a problem in Zambia, and people continue to use fuel. Supporters of such initiatives argue it's better if it comes from recycled waste.
Shares of the Special Acquisition Company, or SPAC, responsible for ex-President Donald Trump's new social media app jumped on Tuesday after launching over the weekend. According to Apptopia, Truth Social was downloaded more than 170,000 times since its launch late Sunday, topping downloads on Apple's App Store. The SPAC was also trending high on investor-focused social media site StockTwits, indicating interest from retail traders. Shares of Digital World Acquisition Corp initially jumped 14% to a level last seen in October, when the blank check firm announced a deal to publicly list Trump Media and Technology Group, the venture behind Truth Social. But by midday Tuesday, shares had given back more than half of those gains. Wall Street's top financial regulators are investigating Trump's $1.25 billion deal to float Trump Media and Technology Group on the stock market, according to a filing from December. Other stocks linked to Trump also whipsawed on Tuesday. Shares of Funware, which was hired by Trump's 2020 re-election campaign to build an app, initially climbed 11% but then turned negative at one point. CF Acquisition Corp 6, the SPAC behind video platform Rumble, which will deliver video and streaming for Truth Social, started the session up about 3.5% but was down more than 7% by midday. Meanwhile, shares of Twitter and Facebook parent Meta Platforms, which both banned Trump from their services following last year's attack on the U.S. Capitol, fell along with the rest of tech in Tuesday's session.